Hi guys, it's Dale with the insurance. Today we're going to talk about it's an article that I know I completely understand. It may Parts of it may be redundant for you, but it's integral. I mean, it has some keys that can help you save on not just it's for home insurance, but for any insurance policy, right? The name of the article is, pardon me for being kind of cut off, 9 ways you can save money on homeowners insurance, right? And as I stated before, there are 9 ways, or these are kind of tips, some of which you'll already know, you may already use, which is good. Some may be new to you, and you may have access to. And also note that these aren't just kind of product specific, right? You may be able to use them with auto insurance, with business insurance, health insurance, all type life insurance, all the other types of insurance you may have. So make sure you keep these in mind every time you're looking to renew your insurance, or if you're looking to kind of obtain your first policy. The first and probably most important, which is obvious, but make sure you create a market, right? So your premium, your dollars are worth a lot, right? Make these carriers work to get your business, right? Find out, and it's not just it's not just the lowest price. It's what provides the best value given your situation, right? Your specific risk, right? So see which carrier provides that combination of coverage, service, pricing, and any other factors that pertain to you specifically, and go with them. But the first one is create a market. Make sure you shop around to actually see what carriers and what coverage fits you best. Another one, multi-policy discount. No more really needs to be said there. The more you can bundle, the more coverage and premium you can provide to a carrier from a business standpoint, you can see how they then can provide you a larger discount, because you're giving them your auto, your home, and maybe even your business insurance, right? So with more policies, you qualify for a greater discount. Making your home kind of not just resistant or theft proof and security. That's one thing that can definitely get you discounts, especially if you have a full-blown great security system. But also, and this one isn't as common, but making your home disaster proof, right? Reinforcing windows, making it kind of reinforced floors and things like that, just in case there's an earthquake. Reinforcing or upgrading your electrical system, your plumbing, things that if the ground were to shift could cause several issues. Some carriers recognize the work that you've done in efforts to prevent kind of the extreme losses that typically happen in a disaster. Another one we list, buy a newly constructed home. Those typically carry low rates, with the idea, which isn't always the case, but the idea that the newer home will have less issues, right? But in this day and age, we know that newer products could be far worse than older products, right? The old brick and mortar homes could last forever. And the materials that some homes are made out of now, with the shoddy workmanship, could cause a lot of problems. But generally, carriers see newer homes lower rates, sorry. Claims free. Make sure if you're claims free, I don't care if it's for a year, make sure you're calling your insurance carrier and letting them know, hey, listen, do you have any discounts for me being claims free for X amount of time, right? Doesn't hurt to ask. Credit, once again, whether you like it or not, credit is a part of the underwriting process. Carriers are for-profit companies. They take reams of data and correlate higher claims, higher payouts with those who have not so good credit. Pretty cut and dry. Doesn't truly make sense because you can't paint everyone with that same brush. There are obviously very good clients and very good people with good records that have bad credit, and vice versa. Those with good credit have a ton of claims. But this is obviously from the carrier's point of view. So if you can keep your credit clean, you are viable for better rates. Another one is you might be, if you're kind of retired at a retirement age, you could qualify for kind of an age-related discount. This next one, not so much. You can look at raising your deductible to also shave some, and this is kind of the last one, to shave some dollars off that premium. But this is a very, I don't want to say sensitive, but you've got to be very particular about it, because if you don't believe at any given time you have the capacity to say absorb financially a $3,000 or a $5,000 deductible, then this isn't a viable option. So it's kind of last on the list because you shouldn't look to this first. Obviously, insurance is taken for those instances where you're in dire need of financial assistance, something very bad has happened. At those given times, you don't want to have to worry about your financial capability to meet that deductible requirement for that coverage to kick in, right? So only access that kind of tip if you believe you will be financially capable of absorbing a higher deductible. So those are kind of some of the tips. Sorry that it was long-winded. Sorry if a lot of them you've already known and you've already listened to or already have in place, but hopefully there were a few there that you can utilize in the future. Okay? Thanks for stopping by, guys, and we'll chat next week.